Hello, hello.
Hello, hello, hello. Hello, can anybody hear me?
I can hear you, Andy.
Excellent, excellent. That is fantastic. Bear with me. Zoom is doing some odd stuff here, which I'm trying to work around.
I had an interesting observation about myself that I hadn't written up yet, but um, I'm an art teacher. I love lines. I love drawing lines. And why would I want to object to learning how to draw trend lines? It's not very clear to me, but I thought you might enjoy the irony of that.
It's funny because I was sort of thinking along those same lines the other day. No pun intended. I said, no, this guy must be great at drawing lines, but he just doesn't like the lines on the charts.
Right.
He must need a blank canvas.
It's I think I got hung up with IRT and the tools and approaching it a different way. And anyhow, blah blah blah. It's I'm coming around and I'm drawing a lot more lines.
Yeah, it's always fun, isn't it? These are realizations about the self.
How are you doing?
I am doing okay, except that my Zoom doesn't want to log in on the computer. It wants to log in perfectly on the iPad, but
Hmm.
on the computer it just doesn't like it. So I'm going to have to do that thing that I hate doing.
Restart.
Yes,
Hmm.
that is exactly it. You guessed it.
For better or for worse. Richer or poorer.
Yes, you have in fact guessed it. Luckily, I don't need a whole lot for this session since it's a PowerPoint presentation. That makes it simpler. So, how is everybody today?
I am fine.
We have a new participant, Valerie. Welcome aboard.
Hello, Valerie.
Valerie seems to be muted, but hopefully she can hear us. And we have Joseph. Joseph, we missed you this week.
Hey, how you doing? Yeah, I know. I'm trying to get settled in with that move and everything I was telling you about.
Gotcha.
Should be good this week.
Excellent, excellent. Well, you didn't miss much. It was a pretty flat week, so
Okay.
you probably did well to take that time off. So, guys, this is Andy Pedraza with Special Effects Academy, and we will get started momentarily. I had a bit of a hiccup here with Zoom on my computer, and I'm trying to get that squared away so we can get started. I'm going to make a last-ditch attempt before I do a complete reboot of the system. I've closed everything down. And let's see. Oh, maybe I can just do this. Oh, there we go. It worked. Never mind. Excellent. And now the only problem is that I did close the presentation. So I need to open it up again. So now it really will be only a couple of minutes and we'll get started. So Valerie joined us about 30 minutes before this meeting. So luckily I noticed the sign up come in and I managed to send out the link. Sometimes technology does work. And if Valerie ever unmutes herself, she can tell us a little bit about herself. Okay, I am now about ready to get started. Let me share my screen. Okay, thank you for joining. Andy Pedraza with Special Effects Academy, and this is the April 29th session of the Forex Trading Room, where we take a look at the week that ended as well as the week ahead to see what the charts are telling us and what, if any, pairs we're going to be focusing on. This is not meant to be a straitjacket by any means. I just look for the likelier charts to be moving, but over the week I'll be looking at all of them anyway. But my focus will usually be on whatever I think has the most potential for the week. On that note, we will get started. Our usual agenda, we're going to look at the currency strength meter for the last 2 weeks. We're going to look at the fundamental announcements for the week to come, the charts for the major pairs, or at least the pairs that I'm interested in tracking, any setups that I see in progress, and a little bit of a parting words there at the end. I always like to highlight something to get you guys thinking either about proper trading or the opportunities or anything else that strikes my fancy that day. And we'll start out with the relative strength meter for today. We take a look here at the week that just ended, which is the chart on your right, on the right-hand side of that screen. And the week immediately prior is the chart on the left. So if we do a little bit of a comparison between the currencies that we're looking at, we see that the Aussie continued to drop against the euro and against the JPY, against the dollar. So not much change there. It just continued. At the same time, it is appreciating against three currency pairs, the Swiss, the pound, and the Kiwi, which also played out in the week prior. So really, it just continued doing the same thing it was doing before. It's middle of the pack. It didn't weaken as much as it could have. That's a good thing. There is some strength coming back to the Aussie. And I am waiting to get into the Aussie pairs again, looking for a good entry to play them back towards a recovery. Ultimately, long term, I am more in favor or more willing to believe in Aussie recovery than further weakness. It seems to be overstretched and right at the bottom, as we'll see when we get to that chart. The Canadian has done a recovery this past week. It did appreciate against everybody except the dollar. The Swiss also continues to be a very middle of the pack towards the bottom, depreciating against most currencies. The only ones it consistently beat were the pound and the Kiwi. The euro also very middle of the pack. The pound continued dropping against pretty much everybody except the Kiwi, the New Zealand dollar. The JPY continued appreciating against everybody except the dollar and the CAD this week. The Kiwi was the clear loser for the week. It ended up depreciating against everybody else. And the dollar was the clear winner, having gone into yet another week of solid strength against all the other currencies. The two columns on the extreme right are gold and silver, actually silver and gold in that order. And I use these just as a little bit of a bellwether. Interesting here is that the week prior, we had silver appreciating against everybody, and this last week was a clear reversal of that, with silver right at the bottom. And actually a very heavy very heavy move by silver towards the bottom. Also noteworthy, the volatility. We had the highest moves the week prior being upwards of 5%, either appreciation or depreciation against other currencies. This last week, the week that just ended, it topped out at 3.5%. So volatility to a degree is going down. And moving on, we have our fundamental announcement calendar for the week. We're going to start out with the CPC from the U.S. Year over year. I'm going to mention this later on, but I've noticed something this past couple of weeks. Most of these announcements, even though they're labeled high, they really don't tend to move the market much. So I tend to ignore them unless they're the really major ones, like an interest rate decision, which, by the way, we have this week from the Fed, or the non-farm payroll, which we also have this week. So those are the ones that I really concentrate on: any interest rate decision, the non-farm payroll, the big fundies. But these last 2 weeks, we've had what I consider not as important fundamentals like the CPI and the CPC, which nonetheless have moved the euro and the pound significantly. So I'm going to have to revise momentarily. So normally this is going to be what happens. They don't really matter all that much. But right now they seem to be very high in impact, and I'm going to start looking at these a lot more closely. So we start with that CPC tomorrow at 8:30 a.m. Eastern time. All these times are U.S. Eastern Daylight Time. The Australian interest rate decision is tomorrow night. It will actually be Tuesday by then, but it's a little bit after midnight my time is the Australian interest rate decision and their press conference at the same time. And we have the employment change Tuesday evening out of New Zealand. And I have added New Zealand to my pairs to focus on because it's definitely gone, as well as I mentioned with the Aussie, it's gone into a bit of an extreme play where I don't think it has much more weakness to give up, especially against the dollar. So I'm going to be adding that one to my radar. I've been ignoring the Kiwi pairs for a few weeks now. I think it's time to bring them back. On Wednesday, we have the GDP quarter over quarter and year over year out of the Eurozone. We have the Fed's monetary policy statement and the interest rate decision from the U.S., and these are key. These are ones that we really need to pay attention to. So Wednesday, I will be opening up the Forex trading room at around 1:30 p.m., half an hour before the announcement, and I'm going to be trading that announcement live. So it's going to be a fundamental week. Moving on to Thursday, we have the CPI out of Europe. And again, I tend to ignore these, but I think based on the last 2 weeks, I can't continue doing that. So I'll be looking at these a little bit more closely, as well as maybe hedging my trades a little bit more if any of the trades carry one of the affected currencies, in this case, the euro. We have Thursday night at 9:30, we have a monetary policy statement out of the Royal Bank of Australia as well. And on Friday, which did not fit on this screen, so I'm going to move over into the next one and ask you to take a look at the very bottom. We have Friday, the non-farm payroll. This is a very massive fundamental, and I will also be opening up the trading room at around 8 o'clock a.m. my time to trade the non-farm payroll live. So we'll have two fundamentals that we will be trading live this week. You get a little bit more bang for your money there. You'll have 2 extra sessions. Moving on to the actual charts. Does anybody have any questions so far before I jump into the charts? Okay, I will take that as a no. Moving on to the charts then with the major pairs, looking at the euro dollar. We see that the euro dollar has made a new recent low. So we had it trading above a certain level of support resistance for quite a while now, since back in December. It has now managed to drop below that. It actually pierced a significant level of resistance, of support, I'm sorry, here at the 121. It went below on Friday and then closed the day out a little bit higher. This is definitely a short opportunity. Once it pierces that level of support, the next level is going to be somewhere down in the 119, 118 area, possibly even deeper. So obviously the euro is having some issues and the dollar is having a stellar run for reasons unknown to everyone, but there you have it. The dollar has been strengthening, and at this point, based on the technicals, we definitely should be looking to short the dollar, and I'll be looking for opportunities in the short term in that direction if they present themselves. Longer term, I am now flipping my views on the euro and definitely going longer term for that big short, but that's a completely separate matter. So we'll be coming back to the euro throughout the week. Is going to be one of the major pairs we're going to be focusing on, especially with the fundamentals that are on the calendar. The pound dollar, we see pretty much the same as with the euro, but it has yet to pierce the most recent low that it made back in late February. We have this, this candle has a bit of a long wick that you cannot see there. It's occluded by one of the lines in the shaded area. So it's somewhere down here. So it's just shy by about 30, 50 pips from having beat that low. We had that very long candle. We can see that the pound had a dreadful week. It went all the way down from a high of 144 almost down to 137. So we will be focusing on an even deeper drop for the pound if it does pierce that prior low. If it doesn't, then likely, and this will happen eventually regardless, I do believe in pound strength for the longer term, which we'll cover in a later chart as well. But right now it is in the tailspin based on a lot of fundamental news as well as market sentiment. USDJPY. Okay, USDJPY has been moving steadily into dollar strength and JPY weakness. That started around actually a month ago, a little bit more than a month ago, around the 20th of March. It has been following this trend line on its way up, managed to break it a little bit more than a week ago, but promptly returned, is trading now above it. I am long in this pair now in one of my long-term accounts. So once it breaks those levels of resistance, it's definitely a long play. And I would expect it to continue going higher until this trend breaks. So my bias is going to be long for the USDJPY over the coming week and probably further. Moving into the USD Canadian. This is a pair that has been moving very sideways at the same time that it does these wild swings. You can see it going all the way up, then all the way down, all the way up, trying to make its way down. This trend line has been a major point of resistance in the point of support in the past week. It neatly bounced off of that and has been going into dollar strength, Canadian weakness, pretty much the same as the rest of the market. The dollar has been the outperforming currency of the last 2 or 3 weeks at least. Right now, we're probably looking at continued dollar strength. So with this pair as well, I am bullish. We'll be looking for opportunities to trade it higher if it presents itself. On the daily charts, my long-term charts, it's definitely something you want to be trading up around to the 131 level of this prior high. And I should add that that trend line there. I will add it for next week, but that would be the high to beat right now. Let's move on to the Aussie dollar. As I mentioned earlier in this presentation, the Aussie dollar has been making very very strong, very focused attempts at going back into Aussie strength, but they have failed constantly, and it's been bouncing between this high and the bottom here at the chart. It is very near its bottom right now, and I would be looking for yet another bounce at this level and for it to try to make its way back up towards the top. If it does pierce that low, however, then all bets are off. It could certainly drop further. So while I'm not too eager to enter this pair simply on a whim here, I will be waiting for a good signal in either direction. I would be willing to take that. Okay, let's move on to our Kiwi dollar. So we have the New Zealand against the dollar, and this is another pair, as I mentioned before, actually another currency I'm going to be focusing on very closely, the Kiwi itself. We have it bouncing. It had been bouncing off of these two levels of support resistance between the around 0.74 and 0.72. It has now pierced the support at the 0.72, gone much deeper by about 100 pips, and can possibly go even deeper yet. This is just another place where the dollar strength has been playing out. One of the pairs that had not bought into dollar strength for a long time and has now started to trend in that direction with a bit of a vengeance. So I'm going to be taking a close look at how this currency and the pairs involved are going to be opening the week to look for any direction. I would be just as happy to trade it back up as I would to trade it towards the bottom. It's just a matter of getting the right signal. USD Swiss, and this one is a very nicely performing pair. We see that dollar strength playing out here as well, but more importantly, it has broken through every single level of resistance that it had on the way up and has now pierced the last one of the diagonal channels that it was following and is making a run for parity against the dollar, which is right here at the top of the chart. I did say last week when it was somewhere around the actual top of the channel that if it bursts through, it would certainly try to make a good, give it the old college effort and try to make its way to parity. That looks to be what it's doing. I also entered long on this one on the longer term account, and you see several trades that I've entered long recently, so I've been stacking them. You can see by the blue arrows. So that's progressing very nicely. And if it gives a good opportunity on the shorter term for a play up to the parity level, that would be about 120, 150 pips that we would do well to capture. So on this one, I am also extremely bullish, but waiting for the week to open to see what the direction is going to be. Aussie Canadian, and I'm not going to be focusing too much on the Canadian pairs this week. They tend to do wild swings, and they've been very unpredictable. And I don't want to be caught on the wrong end of any of these Canadian trades. If I weren't that, I guess, doubtful about them, I would say that the Aussie Canadian is getting very near the bottom level of support. I don't think it will pierce that, but that's still a good 150, about 150 pips away from the current price. And I'm not willing to risk 150 pips right now. So I'll wait for it to bottom out and for it to make a concerted effort to head back towards the top of the chart, which will give us about, by the time that happens, about 400 pips of opportunity. So I'll wait for a break of its bottom feeding nature, I would say. So while I won't be focused on it, I will be looking at it here and there. If I see a good opportunity, I will certainly take it. Euro Swiss, the Swiss has been having issues, as we could see in the USD Swiss chart. With the euro, it's no different. It is trending towards the top, towards extreme Swiss weakness, this one has actually burst through all its prior levels of resistance, and it's made a massive new high that it hasn't seen in the entire visible area of this chart, which goes back to more than a year ago at this point. So we'll continue following this trend line. This may be a good pair to trade. I'll look for a good entry to continue trading it towards the top. As it continues following this trend line, there is really nothing to be too concerned about there. It's simply going up, and price action is going to be king when it comes to these longer term charts. On the euro pound, the euro pound and the pound pairs in general were going through a sustained period of pound strength. You can see that the major point of weakness of the pound against the euro was up here at 0.93 area, right at the top of the chart, back in August of last year. Since then, the pound has steadily been gaining strength over the euro. Yes, it does bounce a little bit on its way down, but in general, we recently made the lowest low of this chart before the bad news out of Europe in the last couple of weeks made this pair go a little bit backwards on us. On the long-term account, we're still short on this pair, and that's this red arrow you see here at the top, and we're carrying a little bit of deficit there. It has been in a nice bit of profit as well. So this is just one day's candle outdid all the profit from the last week or two. But I don't think that this can be sustained. I think that this will, again, trend towards the bottom. It's just one of the normal swings it's doing. So I'm willing to wait for that one to play out. Moving on to Euro JPY. The Japanese has, in general, been weakening against the euro. We can see that it made its highest high back in February, here at the top of the chart. Since then, it has recovered some, bounced off this level of support at the 129.35, bounced off of it at least 2 times, and has now gone back up towards even more yen weakness against the euro strength against the yen, whichever way you want to look at it. The last 2 candles from Friday and Thursday, though, had another retracement into Japanese strength. Rather, that was euro weakness. That was the bad news and bad sentiment coming out of the eurozone in the latter half of the week. So that is this drop. I don't know that that can be sustained, though. And if the news proves to be short-lived, this one may simply head back towards the trend line and continue making its way towards the top. So this is another one I'm very eager to see what it does once the market picks up in the next 24 hours. Euro Canadian, and the Euro Canadian is probably one of the few pairs where we see this Canadian strength and euro weakness tie in at the same time. So it made a high, and we've seen the Canadian recover significantly from that recent high, and it has bounced off a level of support here and is testing it yet again. So these last few candles, as I said before, are the end of the week from last week, where the euro had the crisis between sentiment and fundamentals. I would expect this one as well to return to that trend line and continue making its way up. But as usual, I will wait for a good signal to trade that. We're getting near the end of our charts now. We have the pound JPY. The pound JPY has been bouncing off 2 levels of support resistance that have made a very nice channel. It recently burst out at the top of the channel and then went back in. Looks like it's trying to make its way back to the bottom of the channel. Of course, the long candle is Friday, when the pound had its worst day in quite a while. So we will see what that brings as the week opens. But this is another pair I'm going to be keeping a close eye on. Aussie JPY. As with all the Aussie pairs, they have been trying to regain strength and failing to pierce the levels at the top. It's now trading very near the bottom, though it has recovered or had been recovering very nicely for the past 3 or so weeks before last week taking another downturn. But you notice that that downturn seems to have stalled somewhere around this level. It didn't have the strength, even though it tried to pierce, it didn't have the strength to remain there. And that happened throughout the entire week. So it ended the week pretty flat from where it had been at the beginning and did not give up much ground. Moving on to the Euro New Zealand. Euro New Zealand is a very sideways pair. We can see that since around, I'm going to say the beginning of, actually, yes, the beginning of October, it has been bouncing off these two levels of support resistance here. Recently broke out towards the top and now making its way back down. We did have that Euro weakness at the end of the week, so this one, and we had New Zealand weakness as well. So your guess is as good as mine. We're going to be waiting for the market to actually tell us which way this one's going to be wanting to move. All things being equal, just from a technical analysis point of view, I would say that it's overdue a trip back towards the bottom of that channel around the 166.25, currently at 171.15. That is a really decent number of pips. So I'll be looking for a good opportunity to short it if it continues in the direction of this reversal that we see here that started around the middle of last week. The pound Canadian, nothing much to see here. The same thing we've noted on the other pound charts. We had the very terrible Friday that the British pound had. We've seen in general the Canadian has been recovering against the pound since late February. So it's going on 2 months now. I am a firm believer, as I said before, and I will say later on again in this presentation, of pound strength. So I would expect this one at some point to recover and head back towards the high, which is at the 184, and also a very nice number of pips. But I need for the current trend line that it's been following to get broken and and that to be sustained. But I'll be looking at a long play on the pound Canadian eventually. And that was it. I think that was it. But no, that was it. So those are all our charts that we are going to be looking at the weekly open. This is sort of my summaries, what I call my setups in progress for the week. The Kiwi pairs, as I mentioned before, they haven't had a good year. And much like the Aussie, the market may be due for a sanity check on the Kiwi. So we're going to start to monitor the Kiwi a lot more closely for the next month or so, looking for that good opportunity to trade it back to where it should be. Same applies to the Aussie pairs. As I said, they're bouncing from bottom to top and are now testing the bottoms again. I'm still bullish in the long term, but we need to look for those good entries and exits on the short term until that big correction happens. With the Euro pairs, the public sentiment late last week and even the week before has made it give up some ground. We'll continue to monitor the levels of support and resistance for good entries in whichever direction it intends to trend. So right now, they are definitely doing a reversal. If that's going to continue, I do want my share of that, and I'll look for the good short entries. If I see it heading back towards the top, I'll do the opposite. But my inclination would be for the euro to continue heading down for at least another week or two. The pound pairs, well, the pound went into its second back-to-back week of bad news on both fundamentals and sentiment. I'm going to be keeping a close eye on that, as I would like to trade the retrace back into pound strength, which I consider to be all but inevitable at this point. So keeping a close eye on that. And last but not least, the US dollar. I'm still very ambivalent towards the dollar because because I live in the US and I know what's going on with the economy, the politics, global stuff. And I consider the dollar to be a little bit overvalued, as does really the rest of the market considers that. The market analysts, I should say, consider that to be true as well. Everybody's been calling for a drop in the dollar for this year, which hasn't played out. So we've had a lot of good news here and there. Most recently, the North Korea-South Korea rapport has been finally reestablished after I don't know how many decades they've been at war. The Korean War never ended. A ceasefire was signed, but technically they are still at war, even though no shots are being fired. It looks like we may be in the midst of seeing history unfold if they actually do manage to sign a peace treaty. And I'm not going to say they're going to unify Korea. That's probably not going to happen in our lifetimes, if ever. But at least the whole demilitarized zone and threats from the North Koreans and missile launches and nuclear this and nuclear that, we may be entering a period of quiet in that regard. And of course, the U.S. has been instrumental in making those two sides sit at the table. And we may not like the way it's been done, with even more threats and belligerence and tweets, but the effect has been very clear. The North Korean government, that had been unwilling to budge in anything for years, decades, is now finally actually talking to its neighbor and talking to the rest of the world. So that has given the dollar yet another bit of an uplift. But in general, I'm still expecting the dollar to drop. So while I'll be looking at the dollar pairs, because that's where the movements are, the volatility and the volume, I am going to be doing it very carefully. And of course, you guys will see that play out in the Forex trading room over the week. The lesson, or I guess takeaway for the week, is that the fundamentals have just taken control of the short-term charts. There's a lot of these fundamentals, as I mentioned when I was going through the calendar, that we tend to ignore: CPI, CPCs, and a bunch of other stuff that, even though they say high impact, 19 times out of 20, they don't do anything. So we can safely ignore them. Until now, these past couple of weeks have made me stop and smell the coffee and figure that I need to pay a little bit more attention to them, just to make sure I'm not caught on the wrong side of a trade when they do happen. Of course, proper account and trade management are what are going to keep you safe and in the game. So last week, I ended up reasonably flat. It was a very small profit. And again, I don't expect magic from any 1 week. It's over time that the account is growing. But the week could have ended much better if it wasn't for the fundamentals towards the end of the week. We had the right account and trade management, so it wasn't a disaster. It could have been if we didn't have that in play. So going to be a little bit more careful with the fundamentals going forward. But that being said, if you're in longer term trades, the technicals are still going to be the key. They're going to be the king of the mountain there. Even barring don't look at charts, don't look at indicators, just the price action alone. When you see something trending up, that's the one thing you need, or trending down. That's the only thing you need in order to just put your money on the table. If something's going down, we're going to try to write it down as far as it goes. If it's going up, we're going to do the same in the opposite direction. But that's only going to work in the longer term charts, where the movements are not as magnified by day-to-day events as they are in the smaller ones. That's not to say that's not going to move the same amount of pips. It's the same price, no matter what time frame you chart it on. But if you're doing a long-term trade, your stops and your limits and all that are going to be much wider. My long-term trades usually have stops in excess of 200 pips. And there is very rare fundamentals that have the capacity to move something 200 pips in one swoop. So you get to a more longer-term outlook where these fundamentals may affect something for a week or two, but in the grand scheme of things, they're very short-lived. The trend reestablishes itself, and they keep moving. So if you're a long-term trader, or in your long-term trades, I should say, if you do both kinds of trades, you can safely ignore the calendar of events. But looking at the last few weeks, you only ignore that calendar in the short-term windows at your peril. So that is it for me for the weekly open. We try to do this before the market opens and get a little bit of insight on what's going on. We will continue, as usual, meeting every day at noon and 8 p.m. Eastern Daylight Time throughout the week to actually look for trades and manage any open trades that we have. And then Friday, we wrap up at 3 p.m. So Friday, we don't have an 8 p.m. That one moves up to 3 p.m. And we do the end of the week wrap up. If you miss the beginning, the bookends, I call them, the beginning of the week or the end of the week, I will post those sessions on YouTube and email them out so everybody has them and can review them at their leisure. The middle of the week sessions tend to be very, either you're there or you missed it or you saw the email and placed the trade. So I doubt that anybody's interested in actually watching the recordings of the midweek sessions. If you are, drop me a line. I do record those as well. I just don't publish them because I figure they're no longer relevant by the time I would send them out. So that's it for me today. I'll open up the floor for any Q&A if anybody has anything they want to ask, comment on, or want me to go back at a chart, look at anything, by all means, let me know. So feel free to unmute your mics and ask any questions that you have.
I have a question, but I don't have to be first. Somebody else want to go first?
You are already first, my friend. Go for it.
All right. I'm trying to understand the strength of the British pound. I'm thinking Brexit, fluctuation, where the government is in the whole process, and I don't see much clarity, so I'm having trouble understanding why is the pound so strong when there seems to be confusion.
Okay, well, I'm going to give you my 2 cents. That doesn't mean I'm right, but it is from where I get my opinion. So if we look at the chart, let me see if that chart actually has anything useful for me to show you. So let me get back to the pound dollar. I just forget how far back it goes. It certainly doesn't go back to Brexit. But when Brexit happened and the pound dropped off a cliff,
all right,
that was a massive overreaction. Okay, so here we have the chart. So if we look at the pound dollar, and of course, Brexit was somewhere back to the left of the screen, somewhere way down here. But what I can tell you is that right before Brexit, the pound was at 150 against the dollar. Mm-hmm. After Brexit, it dropped all the way down to 119. That is a massive drop. That's a drop I would expect if the zombie apocalypse happened or somebody had nuked London, or some catastrophe of that magnitude. And it was all based on doom and gloom and everybody saying that it was the end of the world. Obviously, it's not the end of the world. And at some point, cooler heads prevailed, and the pound is starting to go back to that pre-Brexit level. You remember I said my target is 150. That's exactly where it was the day before Brexit. That is already a weak pound. The pound used to trade at more than $2 per pound. Mm-hmm. So 150 is already a weak pound, but it's a very well-priced pound. That is the level where it should be at. We managed to get all the way back to 143.5 in this most recent push before the bad news bears took over last weekend and made the pound drop back to 137, 138. Should the pound be stronger? Yes, I think it should be around the 150. It certainly shouldn't be weaker because no matter what happens with Brexit, you know, they leave the Eurozone, they do this, they do that, they do the other. England, the UK is still a viable economy. They have products they can sell and services they can sell to the rest of the world. It's not like they're going to be paupers after the break. And in fact, Europe needs the UK as much as the UK needs Europe. So yes, you're right. They definitely had to be some weakness in the pound, but not to that degree. I think it was already weak enough at 150. So when you're saying why should it be strong, you're right. It shouldn't be strong. It should be weak, and 150 is weak enough.
Okay.
If that makes any sense.
It does.
But after all the doom and gloom, we started seeing that, you know, the effects of Brexit were not going to be as deep and despairing as all the Remainers were saying. And that's typical in any sort of election where the people are divided. Go back to our election in 2016. Everybody was saying that if Trump won, it would be the end of everything. The stock market would collapse, the dollar collapse, you know, it would be the apocalypse. Well, right. Trump won. Did all that happen?
I watched the election night and the market, and I don't know, it was the middle of the night when the markets, I mean, it was down big time, and suddenly it started turning. And by the dawn, Trump and the market were flying high. Wow, what a turnaround.
Exactly, because there was no real reason for you to say that the apocalypse was coming just because this one guy is going to be president for 4 years or 8 years. So when you have an election that's so emotional for people, they tend to exaggerate. And people buy into that. And market sentiment, like I said in that final slide there on fundamentals, the fundamentals are going to rule the short term. But in the longer term, they're not. Those fundamentals are not going to have any lasting effect. Price will always return to where it should be. And that's where we get the brilliant opportunities to trade. I may miss, and I didn't. I took almost all the Brexit profits. But let's suppose I had missed Brexit completely. I just mistimed it and went in the opposite direction, got taken out at a whatever loss I had planned for. I would have said the same thing. I would have looked at the situation and said, okay, there's no reason for it to be at 119. I'm going to trade it back up to one. And in fact, my target was 140. After Brexit, I said that thing is now too low. It should be back to 140. Well, it took a year for it to get back to the neighborhood of 140. But that's what long-term trading is. You have a long-term target and you trade towards it. In the meantime, you trade your short-term for the quick wins, for your pocket money. But those long-term trades, if you traded the pound from 119 all the way up to even what it is today, that is 1,800 pips. 1,800 pips. That's $18,000 on a full lot. And I am not trading full lots. I'm trading 10 lots at a time on some of these long-term moves. Wow. So I hope that answered your question. And again, that doesn't mean I'm right, but that's my opinion of why the pound has been getting stronger than its than the Brexit aftermath.
Yeah. Are you still defending the S&P at 3,000?
I am still thinking that it will go that high just on hype and the general. I don't believe it should be there.
Right.
And you and I have spoken about this many a time, but I believe that the market insanity will take it above 3,000 before we see the drop. Wow. And when we first started talking about this, it was what, 2,300 maybe?
Yeah.
And since then, it's gone all the way to 2,800 and change.
Yep.
So do you think that was sort of right?
Yeah, I'm looking at the high, you know. It's 2 months now where it hasn't touch that high. So I'm seeing a downtrend.
That's okay. That's okay because, again, this is a long-term thing. You will rarely see something shoot all the way to one of these targets.
Right.
The market just doesn't work that quickly. Sometimes it does. It's brilliant, but you should normally expect that is a long-term stock trade for me. It expires next year, so I'm in no rush for it to do that. And I actually hedged it by also going short on it via options, so I win either way.
Great.
But I suspect that it will. Even if it doesn't get to 3,000, I think I already proved my point when it got to 2,840. I mean, you got to give me that one.
Sure, Andy, I'll give you anything.
Yeah, I gave you that prediction when it was 500 and something dollars below that. So that was pretty good.
Yeah, very good indeed. And it gives me something to focus on, think about. Absolutely. Yeah.
Fantastico. All righty, my friends. Any other questions, comments? Don't let Hayden have the last word.
Right.
Okay, I guess Hayden is going to have the last word. All righty, then. That is it. Valerie, you want to introduce yourself? I don't know if you even have a microphone, but if you do, and you want to speak up, feel free to chime in. If not, and hopefully you are hearing me, I will make sure you get the email with the entire schedule and everything, so you're ready for tomorrow. Okay, guys, then that is going to do it for me for today. I will speak to you again tomorrow at noon my time, and I will send out a recording of this session very shortly. Thank you so much, and as usual, let's make this week memorable.